how candles work, what is a high and a low, and how can you see using your own chart, I love to use the 1 minute chart, in what direction the market goes. I also have here the trading platform from Top Step Trader using TradingView, and I made also some trades in the last 4 weeks to show you based on the same trading strategy that I hope that it can fit together with the information that I'm giving to you, that it makes sense and you can learn something out of this. So first of all, what is a high and what is a low? And for me, it's always a green and a red candle. That means once the market does a green candle, it means for us the market was going up higher. Once the market does a red candle, it means the market was getting lower. So that means a high, because you have people that were buying, the market was going up, and then you have people who sold, selling. And now because people sold here, they also have a stop placement. That means a limitation where they lose money, because when people sell and the market goes down and they want to exit the trade to make money, they need to buy. But the thing is, if people sell and the market goes against us, then people also need to buy, or else they will lose more money than expected. So we always calculate how much money we want to use. And this is the main reason using highs, why it's so efficient, especially trading to these references, what I'm going to show you. When you see a green candle and then a red candle, it shows you there were people, just imagine people were selling and they have placed a stop placement. And a stop placement is a tool that you place in the market to exit the trade. What will tell you, for example, because the trader sold here and the market goes up here, that the trader will then eventually buy using his trading software and then to exit the trade. So a high is always a green and a red candle. And here's the dangerous part. A lot of things with trading patterns, even experienced traders who are trading already since 5 or 15 years, already even with real money, they trade like this. But a huge problem is that you cannot see correctly where the market actually wants to go. If you make the chart very small, I would consider myself every color switch. If it's even a 1 second chart or a 10-second chart, these also exist using candles. You can see every 10 seconds there's a candle, for example, and there's a green and a red candle. I would also consider each green and red candle that is consistent in order also as a high. But here's the thing, it all happens with the bigger to smaller structures. And it's like a snowflake. A snowflake is, if you just look at it big, it looks the same as if you look with a telescope on it. It also looks like the same when you zoom in. And this is called the bigger and the smaller structure. And for me, it's very important to concentrate always on the biggest possible structure that makes sense within specific moves within the next 10, 30, or even 90 minutes. And this is And when taking this in consideration and looking at the market, you see here 90 candles, for example, from here to down here, you see like from 11 a.m. to 12, you see you have 60 candles in this case. And you see the market does this big move. So to answer the question, a bigger structure high is for me just when I see the market with structure making it small like this, that the market was going up and then the market was going down. So now we identified a bigger structure high. And this is something what's very important. It doesn't matter here about the color switch too much. To be more accurate where the bigger structure high is, what I really love is to zoom in. Check this out. The highest point here where the move was here, not even here, was here. And here you see a green and a red candle. Now I'm taking the horizontal line. I'm placing it here. There's a tool, by the way, using TradingView called the horizontal ray. Absolute cool. And we can place it on this highest point here, as you see here. And this is already the biggest structure high. A low is always a red and a green candle. That means a red candle shows us the market was going down. A green candle, the market was going up. This is all too much from the smaller structure. People will tell you the 1 minute chart is too much disturbed, too hard to trade. Yeah, the problem is the market is mostly in the contraction phase. And there are many problems. You need very active reading what we're going through in this video. It's about to make the chart so small as possible. Check this out. The lowest point is here. And now I'm always placing it on the right side. So when I zoom in, check this out. Now I can see it. And then again on the right side, now zooming in. Here you see red and green. So this here, because it's red and green, this is here for me the color switch. And this is for me the lowest point. This is a low. From the bigger structure perspectives within minutes, check this out. From 7 p.m. to here to 8:15 p.m. You see here within within 1 hour that the market did this move, and the next hour the market did this move. So this is from the bigger structure perspective, a red and a green candle, the lowest point. This is a bigger structure low too. So now you understand where bigger structure highs and lows lay. For example, here. Next one, bigger structure high can also be here. Or within the next hour, it was here. Within the next hour, it was just this low here. Within the next hour, it was here, for example. Or here, or here. And it all depends with market experience. If you look at this one market, each market moves different. The S&P 500 are the 500 biggest companies. And it's very similar to the NASDAQ. Those are the 100 biggest companies. Or for example, also to the Euro US dollar. But here's the thing. If you only look at one market, the S&P 500, from my opinion, is absolutely enough. You will see that on the session times, I'm talking about when you plot here on the bottom right side, Central Time, like Chicago, 9 a.m., 8:30 actually starts, but 9 a.m. is the best, to 3 p.m., you will see how the market is moving up and down and aims for these structures, what I just was showing you. So we're going now about how candles work, and then how to identify also pressure, because you can see here, for example, that I had here, that I saw here a trade with adjusting $100. It didn't work out here 2 times. Why it doesn't work out here, even though the market does here a lot of green candles, what I really love. And then I also prepared something for you, because it shows here within the last 3 weeks. Today is the 4th week, so it's just like Tuesday by me doing that. Sadly couldn't enter the one trade. Here you see within the first 2 weeks how I was entering here a trade, adjusted. I have here $2,000, and it's about, from the $2,000, I use $100 a trade. I placed 2 trades, both of them worked. I used $100 in the equation for this one trade, and I made around $570 or $470 for this trade here. And I'm going to explain to you how you can also read pressure, that it's not luck anymore. So first of all, we're going about now how a green and a red candle works. People even who are very advanced, as I just said, it's trading since 5 years, 15 years. They understand how candles work with the wicks, but they never looked how the market was pressuring higher or lower. They only looked always to the left. And even though the trader has maybe 5 years of trading experience, if he never looked at these kind of references, what I'm just showing you, it's like he has 0 experience. It's insane. But of course, because how the market structures and unconsciously, like in the not aware based, the trader of course will have a faster learning curve than somebody who never did anything with trading. So a green candle always, and this is because it's a 1 minute chart, it opens at the bottom where the body is. This is the body here, and it closes at the top. We're going to use here this green candle here. This one is good. So, let's use this one. So green candle opens at the bottom, closes at the top. This means the 1 minute, like 10:13 was starting here, and 10:14 was here where my mouse is. I don't know how the market was wiggling too much around, but all I know is 10:13 was here, 10:14 is up here, and then the wicks are the highest and the lowest point, here and there. After 1 minute, the new green candle opens, and then you can see here there was no lowest point, there is no wick in this case, and the market was just going higher up here within 1 minute. Then it was going down, and then it was here. And then within 1 minute, it closes again. A red candle opens at the top, and then it closes at the bottom of the body. So that means here you have 10:15, 10:16 is down here where my mouse is, the highest and the lowest point within the 1 minute. And then after 1 minute it closes and a new candle opens. And very often you have the problem that you see that a candle is green and it turns red, or the candle was red and then it turns green again. And the solution to this is, if you look on the right side, double click on the bottom by the way, double click on the right, and you see it here on the right side, there is a countdown timer that you see here. It counts right now down from 40 seconds. And if that counts down and you see 5 seconds before the countdown is finished, very often the green or the red candle stays like that. If you press your right click, you see your countdown bar on close. Absolutely important tool for your trading. So how are we using this now for our trading? And this is something what is very important. I think backtesting is not that efficient, it's called seeing things in the past. It's always about seeing things live as if it happens. So if you see here the green candle, and this is something what is very important, you want to look forward within the last couple of minutes what the market did. This is, for example, something what the market did yesterday, and was something what was very interesting. I love to more identify that the market does certain amount of lengths. We're going into more advanced candle reading later on in this video. We're first going to talk about structure, what is more important. That is to make the chart small, like this, and to see like, is the market wiggling here around very often? And by experience, you will see very often after like maybe 2 weeks, maybe 3 weeks, 2 months, you will see that very often it's very hard to trade in these contraction phases. It's more important that the market pushes up very aggressively and then it wants to go up here. What makes this trade here very good is because it came from the bottom. It does more green than red candles. If you have something to write in the smaller structure, if the market does higher lows, that means red, green, it shows us that the market wants to pressure up. Just more green candles and you see how the market pressures up. If the market does more red candles and green, red goes lower here, it shows us that the market was pressuring down. But keep in mind, if the market is here in a contraction phase, it doesn't work that much. It more works here a lot. And then what was very interesting here by seeing, because when the market is here in a contraction phase wiggling around, it is very often like that the market will go out here, 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 everywhere as you see here. And once the market starts to make a lot of green candles, as you see here, as you see here, as you see here, it starts to make a couple of green candles and it goes red sadly, so it's not that good. But here you see how it does more green candles again. Here you see again green candles. It shows you buying pressure. It shows you movement per minute. And the cool thing is, if you see like 5 green candles, and you would take a rectangle, and you're doing in the last 5 candles here, check this out, just a rectangle, and you place it exactly here on the right, you will see eventually within the next 5, 10 or 15 minutes that the market does the same amount of move. So you can estimate, like if you have a specific structure, if you have something to write down, first one, identifying the bigger structure highs or lows, or in the middle of the contraction phase, you have also the top side or the bottom side of the contraction phase where the market wants to go. Second thing is, can you see that the market wants to go there with experience, that the market does one of these two things, either does a lot of green candles or does a lot of red candles, and it would be actually better in combination that it starts to wiggle up or wiggle down. Wiggle up, wiggle down, you can't see it if you put the chart like this, you want to make the chart small. And then you can see here how the market structures here higher, it just wiggles up like that. You just want to see this one with a peripheral view. Not too much objective reading, because we will go now into advanced reading also. And then I will show you like, there's a priority system. And the third thing is then, so first one is you identify where the market wants to go. Second one, a lot of green and red candles and wiggling in that direction. And the third one is then entering the trade. Entering the trade is just like, and this is something what is very important for me, I love to have always color switches. That means if there is a red candle and there's then a green candle, to hold yourself accountable and to say, if I want to buy, I only buy using a 1 minute chart. If I have a red candle and a green candle, both candles need to be closed. Entry after the green candle closes, and my stop placement is always below. As you see here, as you see here, as you see here. This is like step number 3, by the way. So by the way, let's get back here to this area here, so you understand so good as possible. So you understand now the market does 1, 2, 3, 4, 5, like a lot of green candles, like 3, 4 green candles goes here higher, and you see how there's just 1 red candle here in between, right? So you see it does 3 green candles, 1 red candles, shows you already a lot of pressure. So when the market does so much pressure, within a certain amount of length, I'm going to put a trading zone, check this out, from here to there, within these 3 green candles, to expect that the market will do almost the same move will occur very often. Check this out. So while trading, it is more important now to look for these kind of situations. Taking a rectangle while trading, I think, is very good. And you place it here. what makes it very realistic that the market wants to go to this bigger structure high as we just talked about. Because within 1 hour moves up and down with 30 minutes, you can see this is a bigger structure high. While the market was structuring up, so step number 1, step number 2 is you see a lot of green candles. You understood now that the market wiggles up, and we're adding now something to step number 2, and that is that the market will do the same amount in length of retracements. This is something what is very important, because in trading, we first calculate our risk. That means how much money are we using. And first, in the end, we're calculating how much money can we make. This is something what is very important, because if we see like, oh, I can make here $1,000. Okay, you know what? I'm entering the trade, but I'm losing $2,000 or $3,000. But it's more about like, I can see right now here, I can adjust $100. Is it possible now to make $500? And this is called now the multiple R's, the risk-reward ratio, by the way. The risk-reward ratio means how much am I risking, how much am I using. In this case, it's $100. The reward is in this case should be $500 up here. Minimum, it's a fixed rule set. And then the ratio is in between how much money am I using, between like how much can I get, right? So now check this out. There's always for a movement 2 amount of things. We're going now to use here a white chart. Did you understand this? If the market goes in one direction, this is the move in our direction up. This is the reward move. The risk move is back. All right. If we assume the market goes up here to this reference, and you see how the market does this amount of length, if I can see that the market does this move up, and I'm expecting the market does the same length and move up here, the market would reach this high. It makes a lot of sense. So if I can see it for a second, for a third time, like if it does it here for the third time, even though if it would do only 50% of the move what it did here and here, it would it would be very near here, and it would make sense that it's going up here, because with market experience, you will understand that the market is like a magnet with these highs and lows from a bigger structure. It's absolutely insane. It's because people lose and people make money once the market is going to these bigger structure highs and lows. This is something, it's a very interesting concept, by the way. So when seeing the movement back, it is more important to see and to measure how big of the retracement was the market doing here and there. If I can see that the market starts to move up here, I think it's not good to trade. Because if I can see the market does this move back, I better let the market wiggle around like this, let it do the same amount of move until here, and look forward in this circle now. What can I see that the market starts to does to turn around? If the market starts to pressure down, it's done. It's overextending. It needs to shoot up very fast. Then I think it's very good. Maybe up here we find something. But if not, like either it crushes here down, or we can see something that is structures higher with higher lows, lots of green candles. And this is also how it plays also the other 2 trades, what I'm going to show you later. It's just very important to me that you understand this this method. And that's already the full strategy. That's how I read the market. And I hope you can take something out of it. So the market was, and this is something what's very important. So you understand, with the movement, when the market is going up, this is my reward move from here to there, or like from here to there, that the market wants to go up here. Can see it makes sense, of course. But the thing is now, how much am I risking? The problem always with breakout trading strategies. I'm always using momentum-based trading strategies. That means I first let the market produce a cash flow, then on the retracement enter the trade, and then continue to make the trade. Check this out. If you have here this bigger structure high, and you make here a breakout trade, and you're entering here to trade, you don't know how much money you're using until the move is not doing its move again. Because people who bought here have a stop placement here. That means if the market goes down here, then first it will decide if it wants to go down or if it wants to go up. The problem is by trading up here, if you have a tight stop placement, you cannot say like, I want to adjust here $100 and now I want to have here $500, because very often you just get stopped out like 10 or 20 times, and then the market will eventually go in that direction by doing moves back. So the moves back is our risk. This is our money that we are calculating, where does it make sense to trade. It's not about when only, It's actually about, of course, trading the US market to the US session time, but it's also about where does it make sense where the market didn't move a lot. If you see that the market was moving a lot here in a contraction phase like this, of course it is not good to trade here in the middle. It is good as possible to trade down low as possible or at the top as possible. Depends if the market comes from top or from bottom. So calculating our risk first is something what is very important in this move. That means calculating how much movement the market did back. You see here from here to here the length. I'm going to copy now just this rectangle here that you see here. I'm going to make a color so you understand this one. We're going to make this one an orange. So this is our risk of move back. And you see how the market does the same move back. So if the market starts here to make a green candle, if it does a red and a green candle, as I just mentioned, what is only the setup to trade, it is not good to enter the trade. What is more important is to wait. Can I see here something that the market structures up? And now we're coming to the advanced part. What I want to see in this low area here, or even down here, that the market goes up. Or even, and this is something what is also important, we also saw something that the market did something down here in this area, because the market does the same moves back and then it wants to turn. So here are 3 things to read the candles, and I really love this method. It really helps me out a lot, and it is literally like after this one, knowing it's like when somebody says like the 1 minute chart is so distorted, like you cannot trade it and it just tells you trash. The thing is just the person just didn't understood how to read it and didn't. So you need the fundamentals and you need also the market experience to look at the fundamentals. If you have only market experience and you don't have these fundamentals that I'm showing you here inside in this video, like you can have 10 years of trading experience, but you will never get that good because you're not able to see these kind of things what I'm going to show you. So when you have there are 3 major things. You have first a red and a green candle with the body, okay? Candlestick body. If you just ignore the wicks. I can turn off, by the way, here the wicks with the trading platform. This will help you. Check this out. If I go here to settings, if I go here to the wicks, and I'm turning off the wicks, you have your red green is a low, red green low, red green low, red green low. So every red green that you see is a higher low. Every red green. So when we see red green goes higher, this is considered as a higher low. If we have green red and then green red, this is considered as a high, this is at a lower high. And this is something what is very important. I see so many traders that concentrate on both. And I'm telling you, don't give a fuck whatever, man. Like on the other side. It only matters that the market does higher lows if the market wants to go up. Okay? And the market does lower highs if the market goes down. People will tell you to look at the other side also. But I'm telling you, there will be times when the market is going down and does lower highs that it didn't broke a low. It means like it didn't go down here. And sometimes it will go down, like on these 2 kind of references. And something what is just very important, just concentrate on the lower highs. Can you see multiple red candles? Can you see it does green, red, only using the candlestick bodies? Do not look at the wicks at the beginning. This is the major number 1 most powerful thing that I know in trading are the candlestick bodies. Because when we consider also with the auction process, and this is called volume in trading, you always have these 3 things. You have time, you have volume, and you have price. And the thing is, if you have volume, you understand that everywhere where the candle was within 1 minute, from here to there, for example, then it's a green candle because it was going up. Where the candle bodies are, most likely when you just draw a rectangle, you find the most candle bodies inside. Where you find the wicks, check this out. If we go here turning on, if we're here turning on the wicks, you see that where wicks are, we have areas where you see less candlestick bodies. So how is that? And the reason to that is because where the market has wicks, the market has less time and produced also very often, for the majority of time, less volume. There are sometimes cases, yes, oh my god, that the market is doing here more volume than down here. But the market doesn't give a whatever. I'm telling you, if you see that the market produced down here more candles in time, mostly it means also in volume, it just shows you that the market wants to trade lower. Don't overcomplicate things too much with volume or with too much time or an under indicator. I'm just telling you, if you see that the candles, check this out, from here, this contraction phase, what you see down here where the market wiggles around, you see down here that the market has here a lot of candles. You see up here it does less candles. If I go now on a 5-minute chart, it may show us here a wick, by the way. Check this out. It shows us up here the wick. It shows us down here 2, 4, 6 candlestick bodies. And that shows us the market. And this is something what's very important, because you have a price graph on the left. You have your $10. You have $5 here. And if you see at $10, there was just a wick, or one candle actually, or 2 or 3 or 4 candles. But you see down here are 20 candles produced. It shows us the market likes to trade down here. And in trading, we only earn money if we see the market goes down, sell, the market goes down, and then we make money. This is something what is very important. So what I want to tell you is the candlestick bodies using the 1-minute chart, absolutely important to me, and it shows us in what direction wants to go. So this was only the first thing, by the way. Now we're going into 2 more things inside, and this is going to be very interesting, ladies and gentlemen, because we're going to talk now about lower highs from biggest structure to structuring down to medium and even lower structure, what is almost in a 1-second chart, what we can read actually in a 1-minute chart. This is absolutely cool, but this will go more into step 2 and step 3 inside. So if you see, and this is something what's very important, make the chart very small. Do not bullshit yourself that you see a green-red and a lower green-red candle and you say like, hey, this is a lower high. You need to make sure that you are always with structure. That means if you see only with the candlestick bodies that green-red goes lower, it means something, yes, especially if you have a lot of candles. It means it wants to go lower, yeah. But you need also to read the bigger structure. And this is something what I really love. We use a rectangle, and you need also market experience. And check this out. You see from here to there, the market doesn't move. Then it goes down. A retracement, you need to understand this. And this is theory versus practical side. When you see the market is going up and it comes back, some people will say, now I have a green candle and this is going to be a retracement. In the smaller structure, yes. But if the market goes down like this and you put this now, because it's a 1-minute chart, into a 1-hour chart, you will not see this green candle. It will just do you 2 or 3 red candles. It was not a retracement then. And this is called the bigger and the smaller structure. And what is very important to understand there is that when you see that the market already did the move, then it was a retracement. And we cannot say we are trading always retracements, because it's more like we're trying to catch the retracement so good as possible. If the market didn't do it, then we were maybe trading a retracement in a smaller structure. And then if the market goes up and then we look in a 1-hour chart, for example, or 1-day chart where you have like 24 candles or like one candle, then it's turning from whatever color to green, for example, or it shows you then 3 green candles afterwards. So it's very important to understand that you first see that the market did a retracement. That means if you see the market goes up, the move back is the retracement. The move up is the continuation. That means if you see a move down is the continuation, move up is the retracement, and move down is the continuation again. And first after the third step, this is then where the retracement happened. So when you're looking here now at the market, and this is something everything is important what I'm telling you. Well, step number 2, you see how the market does majority of red candles. It doesn't move from here to there. Now it goes lower down here. And down here, we should have seen already that it did here this move back. Now we're placing it from down here to up here. And you see again green-red. If you see within the bigger structure, green-red, only the red candle needs to close then. And you see here how it does from here to there the same move. this shows us here already that this is allowed, that the market structure from here to there with the biggest structure lower. This shows you also from here to there that the market goes lower. So the first one was only each green and red candle, especially also with the highest point. The second thing is with green red is with the wicks. That means if you have green red and the highest point from this one is here, sometimes you have here a third candle. I would consider seriously green red because it shows you always a green red candle that was going up here, it was going down here. And sometimes you see like this third candle that goes up like that. I would still consider this one and sometimes even that, but more this one is going to be used because this was in moving in average, it's called. And it means it's more realistic that the market reaches this one, or you have also tight stop placement that the market, if the market is going here, most likely it will also go to this high, something like that, okay? So on the second thing is that you understand the first one was only the candlestick bodies, green, red, like here, green, red, you have here the high. And the other one is you have the highest wick. So in combination now, check this out. You see from here to there, you have up here green, red, and this is the highest wick. This is number 2, what we're talking about. You have here, but you have here also now green, red, the candlestick bodies. If you ignore the wicks, you have also number 1. Now you saw the market does this move from here to there. You see how the market does from here to there the same move up in the first green, the first color switch. Now you have in combination here again number 2, green, red, the highest wick. And you have number 1 here, only the candlestick bodies. There are times where you see, check this out. You see here, green, red. Here's your color switch. The candlestick body from here to here, that means number 1, our priority where volume shifts and time is going lower. But the highest wick, number 2, check this out. Green and red, highest wick is here. Green and red, highest wick is there. Number 2 goes higher. Number 1 goes lower. If you do not understand this, please let me know in the comment section and I hope to improve your trading with this one. Because now you understand, we prioritize the candlestick bodies that they go lower, but if number 2, if the green, red and green, red goes higher, it's okay. Because the market is not perfect. It is to prioritize what makes sense. The third step and the part is all candles, and I'm going to show this to you with a trade that I did and also with the trade that I analyzed yesterday where I was not capable to enter the trade. We first start here. So now at all, and this is something what's very important, all these 3 steps with the candles, it only works with the first step that you see where the market wants to go from a contraction phase or to a bigger standpoint or to a high or to a low. If you see that it makes sense that the market wants to go back in a contraction phase, you know exactly we're not trading just in the middle here. You know exactly because wicks are down here and the market had a short time here or up there, that it makes more sense that the market goes here in the middle. So the money making activity is to see in what direction the market does the move and to trade in that fucking direction. So in that case, you see how the market is down here. You see how it makes you a lot of green candles. It pushes up. And here's the cool thing, by the way, here was going very aggressively down. It was already a top, it was bottom, wiggles around, it's the India's ugly. You see how it weakens and then how it pushes up here. It does the move from here to there, goes up. So this was the first reference that the market did this retracement. Now here it's getting now important and absolutely cool. What I really love, check this one out. We're making this one a bit less blurry. We're putting this one also away. And now we're going into the first and the second step. Did you understand that? Because as I said, when the market does the same move back, we understand the market wants to go here where my mouse is. Would be best, of course, up here, what I was expecting. And then you see here how green, how red, we start off with red, green. You see with red, green, lowest wick is here, goes higher. Red, green, the candlestick bodies are going higher. You see now here, and this is very important, also red, green, and the lowest wick in the candlestick bodies. But the market didn't, it is the length of retracement the market does in common sense. People will tell you to trade up here, but do not. Like, look what the market is currently doing and adapt. If you see that now, the market does this move back, And it does here red and green. Now check this out. I'm going to draw this inside, and this will improve your trading. I'm telling you, if you're going to look at this, if you're collecting minimum 20 pictures of 20 different trading days, looking at that, understanding where the market wants to go, that the market starts to make majority of green candles, that it does the same moves back. And then on this area, I'm telling you, you will see stuffs, but you can first see it after you saw it multiple times. So you see here how the market does now red, green here with the candlestick bodies and this one. So number 1 is here, number 2 is here. Number 1 is here, red, green. I love to use it, by the way, with the close. Some use it here. I use it like that because the close shows it's closed and it opened and it goes up. So just where the 1 minute closed. So this is number 1, this is number 2. So in reference to number 1, you see number 1, 1 goes higher, 2, 2 goes higher. Same move back. Now check this out from here to there. Red, green. And then you see here how number 1 is getting higher. The candlestick bodies are more higher, by the way, in the higher area. Then in the move, you see here down here, it's just a wick. It shows you less time, less volume was being traded. Sometimes there's more volume, but seriously, don't take this one too serious. It's more about that you see that the market with common sense was less trading here, more trading up here. Also, not only in volume, like in one-time package for the people who are a bit experienced, it's also in quantity of participants. So you can see here now, number 2 is getting from here to there higher, red, green going higher. Now check this out. Same retracement here, and now red, green from here is here number 1, and you see here number 2 is here. Okay? So you see now here how the market has struggles, and it's number 1 is still higher as number 1, but number 2 is like getting lower as number 1, right? Like these kind of things, and it shows you a certain amount of weakness. So now again, you see here the retracement, what the market does. You see here red and green, and we're going now to a third step inside. And the third step, because until here everything is perfect, here it's a bit messed up, and I'm going to show you how the solution is with the reading technique. The first thing is, if you see the market structures here up, the third thing, so the first one was candlestick bodies, the second one was color switches using highs and lowest wicks. The third one is, it doesn't matter what color the candle has, every wick at the bottom, every candle body at the bottom, check this out. So you have here the green candlestick body from here to there, and it does here a double bottom, it's called. It does here the same height, goes higher, check this out, goes higher, double bottom again, goes higher. Now we go again with the same move back, and this is something what's hard to identify, because here I want to have really a green candle to see like that it goes higher here with the color switch, like this one. The other third step to read, what I more like and what I'm more used in this one, what I just showed you, but I'm considering everything, is that I have here to read the lowest wick goes higher. As you see here, check this out. The 3 candles are going higher here, going higher here. So to expect the market goes higher here, higher. I hope you can see this one. That you see every candle the market did. 1, 2, 3, 4, 5, 6, 7 candles. The market did a higher low in the candle itself. And this is market pressure. This is really market pressure, and it's absolutely cool to read. A very huge problem is just then that the trader enters here to trade by seeing that the market did this retracement. And this is the reason why it's important to read here. And now check this out. Now by understanding this, please go back within 1 minute of this video, watch this again, what I just showed you. If you didn't understood it, let me know in the comment section, put a time step inside, giving my best to teach you this one so good as possible. In this area now, because we saw a lot of green candles, it made sense that the market goes up here. Now check this out. When we now look at these candles, this is now the advanced part, what took us now 40 minutes to explain to you. If you look at everything at the high and the lows, I'm going now to place here, put the border away, by the way, like, because so you can see it with the retracement and the wicks. If you look at the wicks, so you saw every wick at the bottom goes higher, right? But as I just said, it's important that the market does this move back. And the thing is, you can see here how the green candle goes here lower. And this shows you weakness. Because look at the highs here. Here it goes higher, lower, and then higher again. And this is what I mean. It messes up the mind. If the market goes up, only check at the lows. Do not check at the highs. If you see the market goes down, only check at the highs. Do not check too much at the lows. Of course, we're seeing everything with common sense, but we're prioritizing it means also when we see a move, we're prioritizing a red and a green candle or a green and a red candle to enter the trade, to have a clear trading setup. because trading is about $1,000 divided into 10 trades, and then it makes sense to trade these kind of things. So look, check this out. We have here the market reaches now the same length, and this is the first time it touches. And you see here how here, from here to here, it goes always lower. So market spikes down the recent low of the candle, spikes down the recent low of the candle, and it shows us pressure down. The only thing what is so powerful is to see that there is a green candle like this. Small and tiny would be good, because when you see 15-minute moves like that and small candles like that, if I have enough leverage, it's called, if I can adjust here $100, that's like a $500 move or $400 move that I can take, sometimes even $800, $900 move. And the thing is here, and this is something what's very important, what you can see here is on the top side, check this out, that the last 3 candles, it was going lower, lower. Now check this out, absolutely cool. You see now how the green candle spikes with the wick, this wick up higher. That means actually when drawing now a specific graph, check this out. You can see how it goes with the structure, and those are highs. It does here a lower high, and it does here a lower low, right? It goes always here lower. And then here you can see how it starts with the green candle to make a higher high first. It breaks the structure here. I don't give a fuck about the structure, by the way, seriously. It's more about this one. Now you see here a higher low. It does a higher low in reference to here. This is the third component of reading the candles. And the more you do it, the better you get. By the way, what the market does, when you have enough experience, what I really loved, when you see the market does here a double top like that, check this out, it goes lower, lower, and then here it starts to get higher. It could not break through, and then it does here the higher low, and it does here the double top. And this means in reading the following thing. You need to imagine there are always 3 kind of standpoints, like up, medium, down. It means if the market goes down, the market does a lower high or a lower low. That means lower high occurs here, lower low occurs here. This means the market is going down. If the market goes medium, like middle, like more contraction phases, less power, you see how the market does a double top from here to there, or it does here a double bottom from here to there. If you see the market goes up, it shows you how the market does a higher high, as you see here, higher high, just first produced when we have here also red candle, and then when there's a green candle, then first the low is finished, and then we have your higher low. This means up. And here's now the cool part. When you look at this, what I was just drawing, and here at the market what it did, you're seeing here how the market is doing here. We're going to take here something smaller. You see how the market does here a lower high, lower low, lower low, lower high, as I just explained. You see here how the market goes up with a higher high. And now check this out. You see how the market starts to make here a higher low in reference to here. So by just seeing this, makes this such a good trade to enter the trade. You can see here also in trading management, it's pretty cool how it still goes higher here. Up here, it's allowed to spike down a couple of times. It's about having quality in the retracement. That means in the certain amount of move. What makes this a good trade? Adjusted $100 to enter the trade because the market was spiking back there. We're talking about this is a $500 move. I also have this on stream, by the way. Like I actually took also a video about it. I was messing up my stream. I couldn't enter the trade. Was a bit sad, but hope next time I will show you some other trades that I did on this account, by the way. And then you see how the market does here the retracement back. Now check this out. You see here. Now this is the advanced part. Starting here, you see how the market does lower highs, lower highs. You see how the market does here lower lows. Even the green candle that is finished shows you that the market does here a lower low of the green candle itself. And this shows you already how messed up this is already to trade here, and it's not good. Now check this out. Here you can see how the market does a double bottom with the green candle. That means from just going down, it is now going to medium. And this already shows you, or shows us, that there is something that the market wants to go up, but it's not enough yet to trade. For some people it is, because it did the same move of retracement. It shows that it has less power. It does a longer green candle, and check this out. On the top you have a double high. It shows you it was going medium, and on the bottom it was also going medium. And it's one of the major reasons, by the way, you see the next candle spiking up here. So every of these small informations is absolutely important. And you see also how the candle from medium here, it goes from here to there higher. Sometimes, yes, it spikes one time down. Totally normal. And this is just major, like, if you see like 10 times the market was going up, and you see like 2 times once it does like this, it doesn't mean it will break structure. Most likely it will continue, it moves up here with the experience. And this is also what happened here. So now we go into reading with the candlestick. The bodies are the most important, as I said. It does 4 candles down there. Absolutely trashy. Now check this out. It does here red, green, lower, lower. Red, green goes higher. This is our most prioritizing thing. You see here 4 green candles, 4 candles that the market does here. Absolutely cool. You see from red, green standpoint, from the lowest wicks. In this case, we take both. Here you see red, green. Here you see red, green. Absolutely cool. Entering the trade here, stop placement here, and then take profit up there. Major problem by taking this trade here. We are already in our destinated area up here in this goal. Our goal was just like the market goes here, because you see how the market wiggles around. And maybe if it has enough pressure, then trading up here. So it would be only smart to enter the trade down here and then to the middle, and then to see if it has enough pressure to trade up. But once the market is already in the middle, it is not smart to trade, because this is exactly where a lot of losing trades occur, because it's like a death area. So I'm going to show you now how I traded the last 3 weeks with the concept also. Just got this account, concentrating on content, also doing with the channel. And I want to show you, and this is something that's very important. I'm not punching in here $500 as I'm like used to be, or as I'm used to, or $350. I'm punching in here $100 a trade. It is a small account because I want to show you how to respect also a funded account. And I'm taking $500 around an average for each winning trade. Sometimes there will be a trade I only can take 200, 300, but I'm trading with quality. So you can see here how I can see here the market was going up. Reference was here, all those highs here. But from the money making activity, it is for me, if I have $2,000, in this case, here I have $2,000 for my trading, and I'm taking 20 trades in average for $100 a trade. It is very important for me to see that the market does small green candles. So what you see here is the market structures from here to there. This is not a low exactly, because this is not a red and a green candle. But the thing is, you see here the wick here is going higher, and it starts to make a lot of green candles, like 1, 2, 3, 4, 5 green candles, and the 2 red candles only. The current red candle that you see here is still open, by the way. It didn't close. So you see here that this is actually not a red candle. You see here 2, 4, 5 green candles, and you see 2 red candles. So once we can see that, like what I did is I entered the trade here after seeing the 4th green candle, because it made sense to me that the market wants to go up here. And what I did is I traded up to this reference using here the systematic by seeing, check this out, market does this move back here. So with experience, it is not about to trade any green candle to wait until the market spikes back. I really love that. Entering the trade here would be good. And check this out, the market does from here to there, same moves of retracement also here. What makes even this trade such a good trade to trade also up to the reference. When we now continue here, we can see here there were also multiple trades there, but it's very tiring. After 1 hour of trading or 2 hours of trading, I tend to make folds. That's why I tell myself 1 hour for me is enough. This is how I trade. And this was the next day how I took a trade. You can see here Topside Trader has also a live stream. Was just like checking their insight. A lot of people that trade with a low risk reward, it means like they adjust $100 to take $100 or adjust $400 to take $400. Totally fine for them. For me, it's very important to use $100 and to make $500 in the equation. That means seeing that the market wants to structure up here. You can see like how the market does here, the higher low. And then it makes sense for me because, and this is very important, I measured the retracement of the market. You can see how the market does this move back, and the market did the same move back. Does here majority of green candles, because the market did here majority of green candles. This is number one, like it shows us more pressure that the market wants to go up. This here shows me the market wants to go up. This is my goal where I was trading to. Then step number 2. So step number 1, I saw that it was making sense because I saw the market was pressuring up, more green than red candles, higher low, bigger structure, goes up. Step number 2 is I see how the market starts now to make here a lot of green candles here already, but here it structures up. You see here 2, 4, 6 green candles, 7. The 7th green candle I was trading, and then there was just 1 red candle in between, right? So I entered the trade after the green candle closed. Stop placement under, adjusted $100, was like around 80 something. And you can see how it took $500 into consideration, aiming for this bigger structure. And that's it. At another day, I saw also a selling trade, but I didn't took it. As you see, for example, here, it's the same again. So we see like step number 1, you see it makes sense that the market wants to go down here. Step number 2, the market has majority of red candles and wiggles down. Step number 2 is also including how about the moves back. Check this out. You see the market does this move back here. You see the market does this move back here and then red candles and it reacts here. And then you see here the market from here to there has the same length almost from here. So if you see here a red candle, absolutely cool. Majority of red candles. Here you see more red candles occur than here. And that's the reason like why it's not that good to trade here, because it's still wiggling around here. Here it was going lower. What makes this trade good? Another trader of mine took this trade. Adjusted $100 to get a $500, $700 trade so far out. And then trading down there. Here you see it is too far out. So if you see here trades, it's good. And I want to show you here, by the way, that I also see here buying opportunities and selling opportunities. But the higher quality lays in the move up here by seeing that the market wants to do the move. And once the market did the move already, especially using the S&P 500, the move is very often done. I hope you can take this for your video. Let me know in the for your trading. Let me know in the comment section. Hope it helps you out. Wish you all love, good trades. JT out.